When is the last time you saw silver move a freaking dollar in a day? When is the last time you saw that happen? Well, today, June 1st, as I'm doing this video at 9 p.m. Eastern Time, it happened. Silver moved up a buck. Gold is now safely like 1340s or so, 38, something like that. Remains to be seen where they end. And again, here's the odd thing, which makes no sense. Options expiration, end of the month. Options expiration, end of the month. Well, that's June 30th. Today's the 1st. Monday the 4th, whatever. Are they going to do a whammy or a double whammy on us on, I'm not sure if the markets are open on July 4th, but if they are, maybe we'll get hit with a double whammy to smack it down, or maybe Tuesday. Or are we going to have more up days? Nobody knows. At least nobody that you or I know knows. So I've got this interesting article once again from Zero Hedge about Italy possibly eyeballing pension funds to be used to bail out banks. So interesting that Italy is in the spotlight all of a sudden, isn't it? It's kind of like Puerto Rico. Nothing happens, you're nothing, and then all of a sudden, oh, hey, by the way, we don't have money to make our debt payments. We owe $70 billion. How many people are in Puerto Rico? 3.5 million. Oh my God, there's more than that in my surrounding area. 3.5. So I did the math. 70 billion. If every man, woman, child, living human being in Puerto Rico were to cough up the money to pay off that debt, what would it be? $20,000 approximately. So if the old J. Snip family lived in Puerto Rico, there's 5 of us suckers. 20, 40, 60, 80, $100,000 my family would owe in order to pay that off. This may come as a shocker to you or not at all. I don't have $100,000 anywhere anyhow. And if I did, do you think I would just say, you know what, this reckless government with its reckless spending and its backdoor deals, I feel bad for you and I want to pay for your sins, essentially. And we hear also that the United States passed the old, I don't know what the title was, not necessarily a bailout for Puerto Rico, but remember how we were talking about we got to act, we got to do something, we can't just let this happen. They passed a law, but it wasn't a bailout. The taxpayers don't bail out Puerto Rico. It was the weirdest damn thing I ever saw, to tell you the truth. And to me, it looked like kind of what they did to Greece, the club. They go to Greece. Here's this bailout money. You guys are in so much debt before the bailout money is even here, you can't even pay that back. But we want to laden you with more debt. Oh, you got another payment coming up? Can't meet that? Yep. Oh, okay, here's some more debt. And we know we promised you payments from the first time we gave you this bailout money, but we need you to tighten the belt a little bit. Austerity, cut back the hours, get rid of the pensions, that old hat. And we'll just give you the next payment. So on paper, we've given you this billions and billions and billions, but we're making payments to you. So on paper, there's $300 billion worth of money going to Greece. But we haven't actually given it all to you. We're making payments to you. And the nice thing about that is if we need any changes to the way you're behaving in society, not following our rules, and you haven't done enough austerity, we just hold back a payment. Meanwhile, we need you to help pay some of that debt off. Water company, electric company, public transportation, toll road, sell it off to our buddies. Privatization. I've discussed this at length. They've gutted Greece. They took all the assets of Greece. That's what it was about the whole time. They knew Greece wouldn't pay it back. They're not expecting Greece to pay it back. They want their oligarch friends to purchase up all the assets. For fire sale prices, of course. So as I read the legislation today, got home, what the hell, HR, what is it, 4,900, I changed this one and that one. Here it is. And I'm looking for money, and I don't see any bailout in here, okay? But I do see $2 million, and it looks like it's $2 million due every month to the committee that oversees the restructuring of Puerto Rico in its debt and finances. And there's some sections in there, subsection A, you cannot pass any laws that overrule what the committee says. You can't do anything other than what the committee agrees to. $400 million is kind of set aside, or the CBO has said will cost in just legal fees and cost of financial experts that will participate in restructuring Puerto Rico. 400 something million dollars approximately. But I saw the section $2 million every month is due, and it goes to the committee for fees and things. $2 million every month. $2 million every month. To a group of unelected people telling your country how it's going to act. So once again, whatever structure they put in place, austerity, job losses, you name it, the citizens won't be able to do anything about it, because that's the rule the committee set in place. And, Puerto Rico's a nice place to vacation. So does it stand that Puerto Rico's getting ready to be a Greece 2.0 and sell off privatization, some of its assets to help pay down this gargantuan debt? When I've already told you, as of right now, the $70 billion, which I don't even know what other unfunded liabilities that the country or U.S. territory of Puerto Rico has. All I know is that this one little specific $70 billion debt we owe these creditors. What about everything? Again, there's always unfunded liabilities somewhere. We're just talking the $70 billion. That's $20,000 for every man, woman, and child. Oh, you just got married? You guys owe $40,000. Oh, you have one kid? You owe $60,000. Do people just have that money laying around, especially in Puerto Rico, which has for the last decade to 2 decades, they're saying, has been in a very, very poor economic situation? Is that even possible? This is like going, you know what? I got a brilliant idea, guys. Go ahead, Jay Snip. Oh, yeah, man, listen. This particular city in America has got man, they're infested with the damn homeless, those rotten, stinking people, man. We need to put some laws in place to tax those people. Brilliant, Jay Snip. We need to tax the hell out of them. Excuse me, the other Jay Snip. Excuse me. You did say homeless people in this one city that's got tons of them. Epidemic. Correct. Do homeless people have any money, usually day-to-day kind of a thing? It goes in and out of their pocket? Is it just me? How are they going to pay for that? Now, while we're not talking about homeless people as if the whole population of Puerto Rico is homeless, no. But the word Puerto Rico in third world country, yeah, they're separated, but kind of a fine line when you look at the picture the whole picture. These people aren't making hardly any money down there. One of the rules in there is basically saying that if you're young, like really young, you're about to start working or something, they can be paid under minimum wage or something. Like you don't even get minimum wage. So while I didn't see bailout legislation, I saw a government entity from the United States coming in and going to set up some rules to help restructure Puerto Rico's debt. And how much do you want to bet, since the debt is basically hedge funds, that the citizen of Puerto Rico will be on the absolute bottom of that totem pole of so-called restructuring your debt? We want to make sure them hedge funds continue to get paid. You just need to worry about how it's going to happen. So my question is, again, $70 billion, $20,000 for each man, woman, and child, and we're talking relatively, not going to say destitute, but relatively a lot of poor people. Okay, that's a fact. There is a lot of poor, lower class, if you will, in Puerto Rico. The old saying, can you squeeze blood from a turnip, is no, and that's going to apply. So even though President Obama signed the law today urgently before that payment was due, my question is, why was it so critical that you did this before that debt payment was due? Like, oh my God, if we don't do this, the debt payment's due on Friday the 1st. It's big bad news. Nowhere in the legislation did I see that we were going to take over the debt payment or help fund the first few debt payments, again, a bailout. So I don't understand what the urgency was. We got to get this done. Oh my God. If nothing changed, we're not handing this money that's owed to these hedge funds, again, or as they call them, financial institutions that lent them money. What was the urgency? I don't know. But I want to get on to Italy, talking about using pension funds to bail out future bank losses. So without any further ado, let me get right into it. Despite, or perhaps due to, Italy's failed attempt to slide a state-funded €40 billion recapitalization attempt past Angela Merkel while blaming it on Brexit, and coupled with a bailout proposal to provide $150 billion, which I just covered, in liquidity to insolvent banks. Oh, remember, we can't use that word because only solvent banks are allowed to get access to that liquidity according to their laws, which would make you wonder, again, if you're so liquid, if you're so solvent, why do you need $150 billion? But overnight, we got yet another confirmation that the biggest risk factor for Europe is not Brexit. Certainly isn't UK, but Italy. I find this absolutely incredibly interesting that the Webbot a couple months ago said, watch Italy, big bank problems, yada, yada, yada. And we haven't been really hearing much about Italy at all. It was kind of like Puerto Rico came out of nowhere. Boom, whoa. How'd you just find out today there's 70 billion you owe, and we're just finding out about this? Italy's in the news like every day now. Bailout, we need more bailout. We need to reword that so we don't, we can skate around Angela Merkel. She doesn't want us to do this. So as the Financial Times reports, overnight, Atlanti, Italy's privately backed €5 billion bank bailout fund, which was created in April to stem the threat of contagion from struggling lenders, and whose assets turned out to be woefully inadequate, took control of Veneto Banca after €1 billion capital increase demanded by EU bank regulators attracted zero interest. This is good news for Veneto Banco and bad news for all other insolvent banks, because the fund, known as Atlas in English, was intended to hold up the sky for Italian banks. Instead, it is now practically out of funds, having depleted more than half of its war chest after taking control of Popular di Vicenza, another regional bank, last month. That has left little in reserve to tackle about €200 billion in non-performing bank loans run up during Italy's 3-year recession, of which $85 billion have not yet been written down. Bad loans are weighing on bank lending and crimping an already weak recovery. As the Financial Times adds, Lorenzo Codogno, an economist and former Treasury Director General, said Italian, and to a lesser extent European, banks have entered into a negative loop where they cannot ask for private capital as there is no investor appetite, and without capital, they cannot provision or write off the non-performing loans. This means that the only hope is public-funded bailouts. However, that is banned by Eurozone regulations. As we reported Monday, Renzi had hoped the turmoil touched off by the UK's vote to leave the EU would persuade Ms. Merkel to suspend state aid rules and allow Rome to lead a recapitalization of Italy's weakest banks. But Ms. Merkel rejected the idea, saying, quote, "We wrote the rules for the credit system. We cannot change them every 2 years," end quote. The European Central Bank also opposed the idea. Benoit Coyer, a board member, said suspending new rules designed to shield taxpayers from the burden of bank rescues would be the end of the single market. Well, I've got an idea, by the way. Rome, Italy. There is definitely an institution that has more money, more assets, real and paper, both assets, that would make a grown man cry. It is called the aptly named Vatican City. You know how much money the Catholic Church has? Can you throw your buddies in Italy a bone? Absolutely. You could do it in a heartbeat, pay it off, and still have plenty more left. We can't talk about the Catholic Church right now. We got to talk about stealing poor citizens' pension funds. And I want to throw this out there for any religious folks, because I love you guys the most. I can only imagine how many Italian citizens, being right there, for God's sakes, in Vatican, near there, are Catholics, okay, and have been tithing to that church for God knows how long, thinking, that's fine, I've got my pension, I've got my retirement, I'll be okay. And when the time comes where your pension has been raped and pillaged out of your hands, you lost your job and austerity measures kicked in and all kinds of problems are happening to you, you poor soul, must have been, maybe you didn't pray enough, or maybe you didn't go to church enough, or maybe you didn't tithe enough. 10% wasn't enough. You should have been given 15, sucker. You should have been given 20%, sucker. Then they're going to go to the church and say, I'm in need. I've been a member of this Catholic Church since I was a little baby. I'm now 70. I need help. Yeah, the Catholic Church attendance has been down really low recently. Yeah. Can't really help you. There's people in far worse conditions than you are, and that's where all this money, the excess money, goes. Well, we want to thank you for being a member of our church and giving us God knows how many hundreds of thousands of dollars over your lifetime. Can't help you. Have a nice day. I can see that coming from a mile away, but we ain't there yet. So I will continue on. Then, as we reported yesterday, in a minor concession, the European Commission signed off a separate plan on Thursday allowing Italy to help banks with short-term liquidity problems. The move is similar to arrangements already in place in several other EU countries since the 2008 financial crisis. The Commission said only solvent banks were eligible for the precautionary scheme, and there was no expectation it would need to be used. Oh, I've got something to say. Sometime in the near future, unexpectedly, it needed to be used. Judging by the prompt bailout of yet one more bank, the question is not if, but when it will be used. A further problem for Italy is that its debt capacity as a sovereign has now topped out, and any new debt incurred to bail out banks will promptly result in downgrades and a threat to state solvency. Quote, any increase in government debt we see as a negative development, said Ed Parker, head of EMEA Sovereign Ratings at Fitch, which rates Italy by, right now, a triple B+, 2 notches above junk. Colin Ellis, chief credit officer at EMEA at Moody's, said, quote, Italian debt stock is already high and it would be credit negative to add to that pile of debt. The problem is the level of uncertainty in Italy and the wider Eurozone right now, end quote. Meanwhile, a desperate Italy, fully aware of what is coming, is considering increasing Atlante's firepower by a further 5 billion euros or more by drawing money from pension funds, the state, or foreign investors, says bankers. Atlante is due to launch a second fund focused on buying non-performing loans next month. Authorities in Italy just sneezed, and you did not want to hear that through this microphone. Would have blew your freaking ears out. I get that from my papa. Atlante is due to launch a second fund focused on buying NPLs next month. Authorities in Italy are racing to create a bigger cushion for the banks before publication of the stress test results expected at the end of July. Yeah, let's get that money in here now because the stress tests are going to show complete crap. All I would say is, well, just rig them like any other number you governments rig. Unemployment, non-farm payroll, GDP, America, last 11 years being revised down now all of a sudden for the last freaking 11 years. I can't get over that. I keep mentioning it. We hear this crap on the non-payroll or the jobless numbers every month, and then another month goes by, maybe two. Oh, here's the new numbers. By the way, we're revising the old numbers last month and the month before. Down. Always revises down. You missed this one for 11 years, huh? You had some data stored in a closet somewhere maybe you didn't get your hands on. So for the last 11 years, it's not been good for our GDP. But it wasn't horrible. But now that they revised it, actually it was horrible now. Isn't that amazing? Of course, if that is the only catalyst, there is no need to worry. There is no way that Mario Draghi will unleash the dominoes that will topple the Italian banking system when it is he himself who, as Italy's central banker, allowed these banks to pile up the unprecedented amount of bad loans to begin with. As such, expect all Italian banks to pass the stress test. The real threat is if the local population wakes up to the risk of holding their savings in a financial institution or system that is now teetering on the edge, something Renzi himself admitted when he said that he hoped to use a liquidity backstop to contain investor panic, which could result in a run on deposits and affect banks' liquidity. But even if it buys every bond, loan, and stock in the world, the ECB will not be able to fix the public's loss of trust in the fractional reserve banking system. Good day, sir.